Hello, I'm William Law, and you're listening to the Arab Digest podcast. My guest today is the Digest's resident energy analyst, Alastair Newton. Alastair, welcome back to the podcast.
Thank you, Bill. Great pleasure to be here.
Now, in your latest piece for Arab Digest, you note that OPEC and the International Energy Agency present different takes on the crucial issue of supply versus demand. In a nutshell, OPEC predicts less surplus supply and therefore less impact on the downward pressure on the price of oil. The IEA goes the other way, arguing there's going to be a glut. So can you flesh that one out for us, Alastair?
Yeah, this is fairly consistent with what we've been seeing all year, with some small changes, which I will come back to. The IEA has consistently and correctly to date, if one puts to one side the fairly large amount of oil which has been going into storage in China in particular, the IEA has correctly been forecasting that supply will be exceeding demand through this year. However, what they've done now is they've upped the ante a bit, and they're looking at, and I would stress that this is they address this as a possibility rather than a firm forecast. They're looking at maybe up to 4 million barrels a day surplus at times in 2026, which is massive. It's 4% of global oil consumption to all intents and purposes. OPEC, on the other hand, the OPEC Secretariat, consistent with, it has to be said, Riyadh's push to unwind the voluntary cuts among the OPEC plus 8, the OPEC Secretariat has been predicting actually quite a tight market, even with a small excess demand relative to supply. Now, to give the OPEC Secretariat its due, it has moderated those numbers a little and is now closer to predicting a balanced market in 2026 than had previously been the case when they were pushing the idea that more oil needed to be pumped. But of course, that's also consistent with the slowing down of the unwinding of the voluntary cuts, which we've seen this month and we'll see again next month, when we will again only be getting 160,000 barrels a day extra or whatever. So, yeah, we've got this big difference between those two expert sources. Overall, the private sector, the investment community, is sitting somewhere in the middle, but probably on balance a bit closer to OPEC, albeit still with a hefty surplus on the supply side, than they are to the latest IEA forecast.
China, you said, is stockpiling. What's going on there, Alastair?
Yes, precisely. China has been stockpiling oil. I think there are a number of ways in which one can look at that. Obviously, oil relative to, the time between the end of the COVID pandemic and even the start of this year, oil has been relatively cheap this year. It's based on historical prices. It seems to be quite a good time to be building up strategic reserves. Of course, if like me, you believe that oil is destined to go lower still in all likelihood, then maybe you might have jumped the gun a bit, but it's still relatively cheap by historical standards. Secondly, of course, China has continued to date to buy oil even more cheaply from Russia. And we can come back to that later if you like, Bill, because obviously we saw Donald Trump make his move against Lukoil and Rosneft last week, and that seemingly is quite important. So stockpiling has been going on. There are some indications that it may be slowing down now. And if China were to stop stockpiling oil altogether, then that would certainly be consistent with the IEA's forecast for next year of at least 3 million barrels a day surplus, which is their base case.
Okay, well, we're on to China now because I was at a conference last week and one of the panels focused on critical minerals, things like lithium that are essential to so many of the technologies we take for granted. And of course, China is in the driver's seat in that particular area. And I was struck by what one of the panelists said, and that was oil drove geopolitics in the 20th century. Critical minerals will drive geopolitics in the 21st century. I want to get your thoughts on that, Alastair. But first of all, How well placed are Gulf oil producers to deal with this global dash to critical minerals?
Well, it seems to be pretty clear that there are significant resources available in some of the Gulf countries, at least. Saudi Arabia certainly has terrain and rocks which suggest that there could be significant supplies of critical minerals there. But let's keep in mind that in general, these are very often trace elements. They are not easy to extract. They are not easy to process. They are very dirty to process, very polluting. They do require a lot of energy, of course, which the Gulf states or most of the Gulf states have no difficulty providing energy. But they also require massive investment. And in order to exploit its reserves of critical minerals, and let's focus on Saudi Arabia because there has been quite a lot of chat about the prospects there, and it is part of the 2030 vision as well. Saudi Arabia, as it does in other areas, has got to ensure that it has an investment climate which is conducive to what are major long-term investments if Saudi is to provide an economic boom in this particular sector. And let's face it too, everybody else seems to be trying to jump on the strategic minerals bandwagon at the moment. And it is quite possible that if we saw a big boom in investment in strategic minerals worldwide, as we may, that it may turn out to be not as remunerative as people think it will be at the moment. As far as the general thesis is concerned, where you started, yes, I think the idea that strategic minerals will be a key driver in geopolitics. I personally prefer to say geoeconomics these days in the 21st century where oil was in the 20th century. I think that is a logical extrapolation to the long-standing idea that silicon chips, microchips, are the new oil. And clearly strategic minerals make up an important part of where we get to silicon chips and AI and microtechnology and all that sort of stuff. So it's part of the same argument. I don't think there's anything particularly new there. It's simply taking it back to the source material rather than the end product.
Mm. Oil has given the Gulf immense wealth and a fair degree of power. So is an ascendant China going to eclipse those Gulf energy powerhouses?
Well, I think if we're going to look at that angle of it, Bill, we need to start thinking very seriously about what I'm going to call, for want of a better word, alternative energy sources, i.e. non-hydrocarbon based energy. Now, China is the undoubted world leader in renewable energy. There's no question about that at all. It's also pretty good at nuclear, by the way. And I'm not sure that I include that as being a renewable energy in the green sense of the word. We could have an argument about that. But as far as solar panels, batteries, all the technology which you need actually to manage systems which run on solar and batteries are concerned, China is the world leader. EVs, China is the world leader. So on, so on, and so on. You could write a great long list about it. And China dominates that market in part because of its near monopoly on many strategic minerals, dominates that market to the extent that, it is going to cause developed countries in particular, Europe and the US, a lot of problems in terms of protecting their existing manufacturing base and or catching up and or simply having to accept that if they are going to reduce their carbon footprint, which is certainly not something which troubles Mr. Trump, of course, they are going to have to accept that they're going to be buying large amounts of kit from China. And that does put China in a very powerful position indeed going forward. And we can have a long debate about when peak oil is going to be, but the investment community now is saying it's further off than we thought. Obviously, the oil majors, particularly Saudi Aramco, it has to be said, the Saudi Aramco among oil producers are saying we need to be drilling more holes in the ground. We're going to run out of oil. Well, there's an interesting point. If oil starts to be in short supply, then alternative energy sources will roll out more quickly in response to a market gap. So I think there's a certain degree of disingenuous there. We are at a completely interesting crossroads as far as energy supply is concerned. China will become more powerful in any case on the global scale of things. there's no reason to suppose that the Gulf states are going to be anything more than middle-ranking powers going forward. That's clearly where the likes of Saudi Arabia and UAE in particular, who are the two countries who have the largest reserves and the largest output in the Gulf, there's no reason to suppose that they will not be looking to continue to enhance their status as middle powers, which they clearly are doing.
Yeah, I mean, you mentioned that the Chinese have put a lot into renewables, but so too have Saudi Aramco and ADNOC, the UAE oil giant. For several years now, they've heavily committed to green. Do you think that they've gone in too deep on green, or are they still well placed to make that transition whenever peak oil arrives? If it may be, as you suggest, further down the road, but are they sort of caught between the canoe and the dock on this one?
I don't think they've gone in too deep at all, Bill. I think they are realistically, to an extent, facing up to the inevitable, which is that sooner or later, Donald Trump notwithstanding, we are going to get to the end of the carbon age, and probably, as the old quip goes, before we run out of the equivalent of stones and the end of the Stone Age and all that. The reality is that the UAE, Saudi Arabia, the Gulf states, or the oil producing Gulf states in general, are experts in energy. And it makes a lot of sense for them to be moving into alternative energy markets, given their expertise in that area. I would say, if anything, that both Saudi Arabia and Abu Dhabi in particular in the UAE would do well to move even more quickly than they have been doing. Perhaps particularly, although, as you know from things I've written in the past, I have reservations about the extent to which hydrogen will become the fuel of the future. I think perhaps particularly in terms of the production of green hydrogen, where they could, I think, make a real impact to their economic benefit, because there is going to be a clear and significant demand for hydrogen out there, even though I don't think it's quite the miracle fuel that some of its advocates have been claiming in the past.
You're listening to the Arab Digest podcast with me, William Law, and our energy analyst, Alastair Newton. As well as the podcast, Arab Digest has a daily newsletter. Why not make it your go-to source for independent analysis and fresh insights into the Middle East and North Africa? Head to our website, arabdigest.org, for details on how to get the newsletter for 2 months for free. That's right, 2 months for free. Check us out at arabdigest.org. Now, on oil strategy, the Saudis and Emiratis seem to be operating from different playbooks. Can you sketch out, Alastair, their differing strategies and what that may mean for the future of OPEC?
Well, I think again, I'm sorry to repeat, but I think in a way we're also at a crossroads here. The speed with which Saudi Arabia is unwinding has slowed, but as I forecasted some months ago, as soon as they had finished unwinding the second round of voluntary cuts, they moved into unwinding the first round of voluntary cuts, which was roughly, if I recall correctly, over a year ahead of the original timescale. And I think Saudi Arabia has some difficult decisions to make over the course of the next literally few weeks. It is now the consensus, I think, among the commentariat that Riyadh is looking to squeeze out the US shale producers. And so far, they haven't really made a lot of headway on that. Now, for sure, the shale producers have been cutting back on labour force, looking for more efficiency gains, at which they've been quite successful, although there is now a view that they've roughly got to the end of their tether on that one. But the simple fact is that the US is still producing record amounts of oil. And to my way of thinking, as I said in my most recent offering for the newsletter, it makes no sense for Saudi Arabia to throw in the towel at this stage, having gone this far over the course of the last 8-9 months or whatever. And from where I'm sitting, despite the fiscal discomfort that this does undoubtedly cause Riyadh, selling with Brent roughly $30 a barrel below the budget break-even point, I think Saudi Arabia's got to keep going. I think they've got to continue to keep the pressure on to achieve what is clearly their objective here, which is to squeeze out the US shale sector. Now, I'm not making a forecast to that effect, as I said in the recent newsletter, Bill, because I don't know what the thinking is in Riyadh at the moment. I do think that we could suddenly see an unexpected change after Mohammed bin Salman's planned visit to Washington next month, because I do believe there is an element of him looking to appease Donald Trump and keep close relations with the US, et cetera, in the way that Saudis have been going, pumping more oil. And maybe we'll see a change of direction after that. I also think, as I wrote in a newsletter a few weeks ago, that Donald Trump's own policies are doing more damage to shale prospects in the US than the Saudis have to date. So we need to keep that in mind too. So I'm not clear where Saudi Arabia is going to go. I'm clear what their objective has been and still is. It's a bit more complicated than a single objective, but almost anything could happen in the new year. However, I doubt very much that we are going to see, with all due respect to the IEA, the American IEA, the Energy Administration there, I doubt very much that we are going to see OPEC beginning to cut output early in the new year. I think they will, at most, they will flatline through at sort of current levels. I don't think we're going to see them cutting output. I don't think Saudi Arabia is into that. And I certainly don't think Saudi Arabia's OPEC plus partners are into that. And particularly not with Brent at, 65 today. It's gone back through the 65 ceiling. The reality is that I don't think you're going to see a OPEC plus trimming output in the foreseeable future, which means we're still going to have a big surplus in markets.
And the Emiratis?
The Emiratis, of course, are playing their own game. They are reportedly pumping about 1 million barrels a day more than their quota. They want more. They will continue to pressure the Saudis on this. If Saudi Arabia were to start cutting its own output, I imagine that the UAE would gleefully not follow suit. That I think there's going to continue to be tensions between Abu Dhabi and Riyadh. And as I have written on several occasions, this is probably the biggest single risk to the continuity of OPEC as an organization. But I don't think we're at the break point yet.
Okay, so OPEC can survive for the time being while the Saudis and the Emiratis duke it out. You've mentioned President Trump and the new sanctions on Russian oil, and you've argued this will not affect the price of oil very much in the short term. Can you explain your thinking on that? Two main points, actually, Bill. First of all, the Russians have proved to be remarkably adept at getting round sanctions. And although the European Union as well is tightening its sanctions on Russia's Black Fleet and so on, I think the Russians have got a lot of practice at this, and I don't think we should underestimate their ability to continue to get oil into the marketplace one way or the other. Secondly, I doubt very much indeed that whatever transpires between Xi Jinping and Donald Trump over the war in Ukraine when they meet on the 30th, I doubt very much indeed that Xi Jinping is going to do anything very much which complicates Vladimir Putin's ability to pay for the war even more than it is already. China has its own interests at stake there, and keeping the Russian military machine working seems to be entirely consistent with whatever Xi Jinping's objectives are on that front. So I do think you're going to continue to see Russian oil getting to China, and not only to the so-called teapot refineries. India is a little bit more complicated, but so far all the Indian government has conceded is that it will be prepared to phase out buying Russian oil over time. Contrary to some of the headlines which were banging around last week, nobody has yet said that there's going to be a dead halt to buying oil from Rosneft and Lukoil. So the market reaction, which was
roughly $3 a barrel on Brent and on WTI. WTI just back in the 60 plus zone, at the 61 plus zone, as a result of Trump's announcement, which is still below the comfort level of shale producers. Let's keep that in mind. Brent back, as I mentioned a moment ago, just above 65, having broken through that floor quite recently, and that was quite a long-standing floor as well. I still think that when markets settle down to this new reality, and when Trump comes away from his meeting with Xi Jinping with very little, we know from what's been said already by Bessent in particular that we're going to see no more than a framework on trade.
Scott Bessent, Trump's Treasury Secretary.
I do think that we are likely to see what's been a fairly consistent trend this year of oil Brent sliding towards 60, continued through to the end of the year. And my forecast for the end of the year remains $55 to $60 a barrel.
Yeah, that was going to be my wrap question. Was you're going to stick to that? But just out of interest, what are the Russians selling their oil for? I mean, it's below the going price, but how much below? I mean, and the Chinese, of course, stockpiling. Do you know what the price is?
About $10 a barrel below the market price.
$10 a barrel. Of course, they've got this what they call it the shadow fleet, which is moving the oil around pretty efficiently and pretty effectively.
Yeah. I mean, you know, it's not that sanctions are ineffective, because they're not. And there's actually a pretty good op-ed in the Financial Times, I think yesterday, about sanctions are effective, they just take time. But the reality is that because the Biden administration in particular was very reluctant to put sanctions on Russian oil because it wanted cheap oil on the market, the Russians have been able to plan accordingly and prepare accordingly and export accordingly because there's not been a tight grip on Russian oil exports. Trump similarly has been slow to move initially, but he has moved now. I guess there's always going to be a question mark over how long is that threat going to stay in place, because one could imagine that Vladimir Putin picks up the phone, calls Trump in the Oval Office, and sweet talks him into yet another U-turn. So we shouldn't take it as a given that the Rosneft Lukoil threat is actually going to be followed through any more than many other things which Trump has said about the Russia-Ukraine war over recent months has been followed through.
Yes, the Trump factor follows us around on so many fronts.
You know,
what will he do? What will he say? And where will he go next? And
you could put that question to John Altman the next time you have him on.
Well, wait and see. But it makes for an exciting times, and not just in the energy sector, but pretty much every sector. Alastair, thanks again for talking to us.
Pleasure, Bill. Always good to do a podcast with you. And just to give a preview, you asked me about Saudi Arabia and strategic minerals. I will be taking a look at that, and I will be writing something about that in the not too distant future. Not promising it'll be my next newsletter offering, depends on what the news flow looks like. But your readers should be looking out for that if it is a topic which interests them. Thanks very much indeed for today.
Thank you, Alastair. All the more reason for our listeners to have a look at the Arab Digest webpage, and there's an offer for 2 months of a free subscription, so you really get Alastair's take on critical minerals, which are critically important. Thanks again, Alastair.
Thank you, Bill. All the best.
You've been listening to the Arab Digest podcast. My guest today was the Digest's energy analyst, Alastair Newton. The Middle East is the single most important story in the world today, and getting a grip in it has never been more timely. That's what Arab Digest does week in, week out with the podcast and our daily newsletter. Here at the Digest, we have a team of analysts, commentators, and writers, contributors like Alastair, providing acute insights and fresh perspectives you will not find anywhere else. And here's something else to think about. Independent journalism is under intense pressure. Here at Arab Digest, we are an independent voice. No sponsors and no advertising. Our funding comes only from our subscribers. If you'd like to support that independent voice and plug into everything Arab Digest has to offer, and that includes our daily newsletter. Head to our website at arabdigest.org, where we have a free 2-month trial to the newsletter on offer. Follow us on Facebook, X, and LinkedIn, and search our library of more than 300 podcasts on Apple Podcasts, Spotify, SoundCloud, or other platforms. Thank you for listening. I'm William Law, editor of the Arab Digest. Essential reading, essential listening from independent sources.